Hello, all. Today is Friday, June 4th, and I'm back with another trade journal walkthrough. So, today, honestly, I did not do a lot of trading. The setups that I charted, none of them, well, a lot of them hit, but none of them really ran in with actionable signals that I could get in on. So, I'm going to show you one trade I did take on Roblox that was a loss, and then I'm going to talk a bit about some SPY puts that I bought and the reason for that. So this is Roblox, and I entered the trade here on the 212 reversal. We had a hammer here, meaning, some strong price rejection from the downside, and that paired with the inside candle and the two up, that was a good actionable signal for me to get in on. It had already crossed my orb strategy, but I didn't get in on at this point because I was looking at some other trades. So I saw this, come down and then do this action. So I thought maybe, it was a bit of consolidation and it was going to continue on. It didn't do that, however. I held it through this shooter, which in, retrospect, this is really when I should have gotten rid of it according to the strat, because this shows strong price rejection to the upside. And it, was still a two up in that case. So it went two down. I was going to hold it through the support level to give it some time to recover for at least for me to zero out at my trade. And then I had this reversal down here. So it was a two down, two up reversal, two reversal. And I ultimately got out on this candle. So I was hoping, I told myself, if it bounces off of this line, so I kept this as my hard stop essentially. If the body of the candle closed across this line, then I was going to get rid of it down here, which would have been probably like a 10 to 12% loss. I ended up, it did bounce off, and then it had a two down here. Oddly enough, this wasn't a hammer position. But if we go and look at let's go and look at the day. So the day is trading up, but it almost gapped in the sense that the body of the candle was not there. And I'm pretty sure we are at, okay, we're at a two up week. So yeah, I say this to say I would have gotten out earlier on that shooter, but ultimately I got out here and took a 5% loss. Now let's talk about SPY. So then I shifted my focus to prepare for something known as quad witching. So quad witching is a date where stock index futures, stock index options, stock options, and single stock futures expire on the exact same day. So this happens 4 times a year at the end of a quarter. And the upcoming date will be the second one, which is June, and that's on June 18th. So the way to think about this is not necessarily that the market's going to trend a specific way. It doesn't tell us that. It just tells us that there's going to be a lot of volume in the market and a lot of volatility. When you have all of these asset classes expiring on the same day, it means that institutional traders have decisions to make, big decisions to make. They have to exit positions that are expiring on this day. They have to start new positions and ultimately restructure their portfolio. So that's how we get the lot of volatility. And, as retail traders, we have to be very careful because that creates big movements in the market. So if you do look historically, it does appear, I did some of my own research on the SPY, and the days leading up to quad witching, the markets tend to fall or trade sideways from stocks and options being sold off. When stocks move sideways, this is bad for your options because they're getting degraded by that theta. If you don't get any price movement, each day you're just getting a price shaved off of your options contract value. I obviously do, day trading, so that affects me a little less, but overall, it's a good idea to just kind of be aware of this. And I ultimately, as a means of, not really protection, but just a way to like potentially, profit off of this. We have the SPY. It today, you can see it broke out of the orb strategy and is continuing to ride. Broke one price target already. And if we look at the SPY over time, and let me take off this orb indicator and this average daily range indicator. You know, the SPY gapped up today and is trading, I was going to say all-time highs, but I did think that this was higher. Yeah, so it's not all-time highs, but, you know, it gapped up today after dipping down. So I thought this was a good time to buy some puts. I bought puts for the 6/18 date around 420. At 420 strike price. That's close enough. We'll do that. And I also bought for June 11th. So the idea here is that, you know, as people are exiting their positions and we get some more market volatility, that the SPY will likely not reach another set of all-time highs. But again, I am not a financial advisor. I'm not telling you to do this. I'm just telling you what I did in my trading today. And my plan is to hold on to these through the end of next week. If they gain a lot, like if we gap down again and I go in the money on those, I might just get rid of them because that will be around, you know, a 30 to 50% gain on those options contracts, potentially higher. So I essentially puts are on sale right now for the SPY because this is going up and this gapped up. So I bought for June 18th, which is right here. So as long as we don't continue to make new time highs continuously until that date, you know, I'll make a profit on those. So I'll make sure to update. But that is kind of a decision that was made partially because we gapped up, and that would put puts on sale, and knowing that quad witching is coming up and people are going to be taking profits. So yeah, that's it for today. Pretty slow trading day. I will catch you all on Sunday with a trade setup video where I'll give some of the trades that I'm going to be looking at for the week. Thank you.